they have to put into which given is varying. We will apologize for that. But let us ensure that we meet best of the technical study. Along with the information problem, let us also remember the technical part. Let us make memory of the technical study as well. So we are already scheduled 9:30. So we start. Then this is with us. Kindly welcome to the good round of applause.
Good morning. We have with us a time frame of 120 minutes, which has been allotted, and the agenda is to discuss 3 case studies, which the groups have already discussed. In some of the groups, for some of the time I was there, so whatever I have observed, I will cover. Nevertheless, the manner in which I propose to deal with the case studies is slightly different. Instead of going to your questions proper, I would prefer to clear the concepts. Once the concepts are clear and we know what the law is, we can apply that law to any set of facts. I'm not saying that I will not apply it to the fact pattern given in the case study, but we will first be clear in our minds as to what is it that we are trying to discuss, what is the legal position on that. We will be guided by the judicial precedents, but not be carried away by them, because we could have a different view on some of the judicial precedents, except of course where the precedent is from the apex court. The first case study deals with conversion of a private limited company into an LLP. The question which is bothering everybody and which is there in the case study is that the company which is transforming itself into an LLP has huge share premium. We are being carried away by the fact that there is a decision of Kolkata Tribunal in Goduri Dealcom LLP which has taken the view, or which has endorsed the view of the assessing officer and has reversed the order of CID appeal and has held that the amount of share premium which is carried into the books of the LLP from the books of the company transforms itself into an income and is chargeable to tax under section 56(1). Mind you, we are dealing with the year of conversion. We are dealing with the assessment of an LLP, not the assessment of the company which has received the share premium. 2 facts should be kept in mind. Now, before we get into the legal position proper, let us on first principles understand whether conversion of company into LLP constitutes a transfer or not in law. Suppose the 4713B was not there. Would I pay capital gains or not? Because if there was no transfer, then whether 4713B is there or does not make any difference to me. But if there is a transfer, then 4713B says, boss, if you satisfy conditions stated in the proviso, which is A to F, including EA, which has been inserted subsequently, then I will not tax. Also be mindful of the fact that if at all 4713B does not apply, if at all 4713B does not apply, you have not one capital gain, but you have 2 capital gains, which you are supposed to offer for taxation. 4713B grants you an exemption or non-taxability to capital gains. Number one, capital gain which arises to the company upon conversion into LLP, assuming this is a transfer. Second, capital gain which arises to a shareholder who now becomes a partner in an LLP. Therefore, his shares are extinguished in consideration of capital in LLP. Mind you, the cost of the shares could be drastically different from the balance to his credit in the books of the LLP. There could be another issue on applicability of 50 CA, etc. So far, not getting into that. Right? Am I clear? Now, today I'll be going extremely slow. I'm conscious that yesterday I was told that second and third you ran very fast. Some of the participants said that at least for common order, the second presentation, do it again, etc. I'm okay, subject to availability of time, because I'm anyway here. Right? The deeming fictions or the retrospective amendments, I was told by the participants that is paid company हो तो हो गया है सर, जो है वो है, लेकिन वो common order वाला क्या है, right? I had to run fast yesterday only with a view to cover. Today I may not bother about that. We will see how we go, right? But whatever we are doing, let's be very clear. So are we all clear that if there is a transfer, there will be two capital gains? Now, is there a transfer? Come to the basic question. Is there a transfer? If there is a transfer, I need 4713B. If there is no transfer, I'll say I need 4713B. I'll go by Palkiwala's commentary. Certain provisions are made out of abundant caution. Right? Like 47 mein bola hai, gift will not give rise to capital gain. Gift can never give rise to capital gain. I know that. Right? But that is where Palkiwala says that certain provisions in the law, certain exemptions are given out of abundant caution to avoid litigation. So my point is this one of those, or is this not? Right? Let's look at the law proper. 47 says, nothing contained in 45 shall apply to the following transfers. Therefore, law is presuming कि जो 47 में दिया वो ट्रांसफर तो है, right? वो ट्रांसफर तो है according to law. Fine. Then withdrawal of exemption. Under 4713B, you get exemption if you satisfy conditions from A to 13. A to E or F, whatever, A to F, right? Now, those conditions have to be satisfied, some of them in the year of conversion and some of them over a period of time, right? Now, if whatever is to be satisfied in the year of conversion, you have satisfied, then 4713B will give you an exemption and tell you आगे बढ़ो. आगे बढ़ते बढ़ते जब 3 बरस वाला कंडीशन आया, 5 years वाला आया, वो आप पे वायलेट कर दी. आप वहाँ exemption लेके बैठे थे 4713B में in the year of conversion. Therefore, now 47 capital A tells you, boss, if subsequently you have violated something which I told you not to violate, then I will take back the exemption. So 47A, mind you, can apply only when 4713B has been granted to me. If 4713B is not granted, 47A apply करने का सवाल ही नहीं होता. Clear? 47A is a clawback provision. It is not a provision granting you not a provision charging you to tax. Okay. Now look at the explanatory memorandum to understand what the intention of the legislature is. They say under the existing provisions of the Act, conversion of company to LLP has definite tax implication. Transfer of assets on conversion attracts levy of capital gains tax. Transfer on conversion attracts levy of capital gains tax. I am aware that I have decisions to say that explanatory memorandum will not be decisive if the language is clear. But I also have a CBDT circular of 2011 which says under the existing provisions, conversion of a company into LLP had definite tax implication. Transfer of assets or shares held in the company by a shareholder on conversion attracted levy of capital gains. Therefore, CBDT circular will be binding on the assessing officer. May not be binding on the courts, may not be binding on the tribunal, but no CIT appeal is going to go contrary to this. Therefore, you forget your argument कि transfer तो है ही नहीं. तो आगे बढ़ो ये मान के कि transfer तो है. आगे बढ़ो ये मान के कि transfer तो है, नहीं तो be prepared for litigation up to Supreme Court if your stakes are too high. Stakes cannot be too high because you are talking of a company with an asset size of less than 5 crores, turnover of less than 60 lakhs. So you cannot have a stake which justifies traveling all the way round to the courts. Okay. Now, these are some of the decisions. Today's presentation will not be shared because this is only a case study presentation. So if at all you feel that some case law is relevant to you, you can please note it down. Yesterday's presentations I will submit. Okay, now these are case laws in favor and against to suggest what is the binding effect of the explanatory memorandum. But because we also have a CBDT circular, as I said, we will not get into that controversy. Let us go ahead with the understanding that conversion of a company into LLP triggers a transfer chargeable to tax under 45 if conditions of 47(13)(b) are not satisfied. I repeat, there are 2 capital gains and not 1 capital gain, both of which are given as exempt. Okay, fine. Now look at this beautiful observation by the Madras High Court. It says courts can always jettison the explanatory memorandum and go into the statutory provision itself, but the common man is likely to be taken in by them and is likely to have arranged his fiscal affairs accordingly. If ultimately explanatory memorandum is proved to be based on a wrong understanding of the Act, it would have rendered considerable damage to the assessee who after a few years find the court's decision to be contrary to these explanations. Therefore, what this decision is telling you is, explanatory memorandum में बोला होगा जो बोला होगा, I am going to read the law. He says courts have a discretion to decide the law irrespective of what is the understanding stated in the explanatory memorandum. He says courts can do that. But a common man will be carried away by what is written in the explanatory memorandum, just as we were carried away now by what was written. I was more influenced by the language of section 47, that the following transfers shall not be chargeable. Therefore, law itself is giving me an indication that transfer to hai. Okay. Now, question comes, itna jo halla ho raha hai, share premium. Right now, what is share premium? First question is, a share premium which is a sort of a capital reserve or has restricted use under Companies Act, when it becomes a LLP, becomes a free reserve. The question is it available for distribution? The answer is there is no bar. There is no bar when a company transforms into LLP. The share premium lying in the books of the company will travel to the books of the LLP, correct? And travel as what? Either of the 2 options. Travel as part of partner's capital, or travel to the balance sheet under the heading reserves and surplus. You call it erstwhile share premium, you call it by whatever name that you want. If tomorrow that LLP were to be wound up, who will receive that money? The partners. If company was to be wound up, who would have received the money? Sure. कोई फर्क है क्या? कोई फर्क है क्या? Winding up stage पे तो नहीं, correct? So this question as to how should I account it? Now those of you, most of you are signing balance sheets unlike me who doesn't do any attest function. You are aware that there is a heading called shareholders fund. Now in that shareholders fund you have share capital and you have reserves and surplus. और अगर डेबिट साइड में कोई डेबिट बैलेंस है P&L का तो माइनस हो जाता है. So shareholders fund क्या है? What is available to the shareholders? कंपनी के एसेट्स में shareholders का contribution कितना है उसको either what you call it net worth or you call it shareholders funds, call it by whatever accounting terminology you like. Okay. Now the question is, something which was then not taxable, does it become taxable merely because I have transformed the form? I would take an example of a girl who pre-marriage would follow the customs of the family of her birth. Post-marriage, she may be into a family where customs are totally different. The practices are totally different. Can she now say that no, having here, I will still be governed by those practices? Going by our tradition at least, the form changes, the person still remains the same. The person still is the same, the form changes. Right? Now what are judicial precedents? Directly on share premium, you have two decisions. One is the decision about which a lot of noise is being made, and the second is Bombay Tribunal in NICAF LLP. Okay, this was also a case of share premium. In your Goduri, the share premium travelled to the LLP under the heading reserves and surplus. In NICAF, share premium travelled to the LLP by credit to partners capital account. So दोनों सिचुएशन आपकी कवर्ड, एक गोदुली से और एक बॉम्बे ट्राइब्यूनल से. Am I clear? To the best of my knowledge, there is no third decision on conversion of company into LLP where there was share. Clear so far? Yeah. I would request that if we can keep questions aside so that the flow is not interrupted, and considering paucity of time, I can cover as much. I am here, so offline I can take. If time permits, we can take it online also. And about your point, the next bullet has it. The SSC has even prayed for stay of operation of the order. Nothing has been decided by the Kolkata High Court so far. Now, incidentally, we are aware that if there is any decision of any High Court in the country, and that is the only High Court decision, then that decision becomes binding on all lower authorities. Also, I am aware that this High Court decision, which is the only High Court decision, becomes persuasive for the other High Courts. Why? Because we are deciding interpretation of a central statute. I cannot have a position where Bombay takes one view, Kolkata takes another view, Madras takes a third view. Okay? So judicial discipline mandates that unless there are serious reasons, the second High Court should normally not differ with the first High Court. Himachal Pradesh High Court in Sojin Flora Pharma LLP was dealing with conversion of a partnership into LLP. Okay? We are dealing with company to LLP, a partnership to LLP. Provisions of conversion are pari materia same. Language in the LLP Act is by and large same. The question arose when this company, having converted itself into LLP, went to the records of the revenue and said, transfer the title of the land in my name. The registrar said, वो करेंगे, पहले जाके stamp duty भर के. Right? So this man came to the High Court and said, where is the transfer? It is only a change of form. It's only a change of form from partnership into LLP. Where is the question of any stamp duty? The Himachal Pradesh High Court went in detail into the provisions of conversion in the LLP Act, went through all the old precedents of conversion under Part 9 of the Companies Act and concluded that partnership firm's legal entity after conversion does not change. Only identity of the firm as a legal entity changes, right? Such conversion or change in the name does not amount to change in the constitution of the partnership firm. Stamp duty and registration fee cannot be levied. Therefore, authority for the proposition can transfer to a. But if I am arguing for the department, I will say transfer under income tax law is widely defined than transfer under a general law. Maybe Himachal Pradesh High Court is correct. I respect Himachal Pradesh High Court, but that's a decision under general law. For my purposes, I will still regard it as a transfer. Why? Because 47 said the following transfer shall not be chargeable. Possible. But nevertheless, this is an important unreported decision which you must keep in mind. Now, come to what is share. Share premium क्या होता? Amount in excess of the face value of the share received by the company at the time of issuing the shares. Am I correct? Amount in excess of face value of the share which the company receives from its shareholder at the time of issuing the share. So if I receive assets of 10 crore and I give you shares of the face value of 1 crore, the 9 crore extra का जो asset मिला is nothing but share premium. That is what your first bullet is saying. The second bullet, Supreme Court is saying there is nothing in law that shares cannot be issued at differential premium to different people. Therefore, I like him, he is my friend. I may give him shares at a premium of 100 rupees. The other person is bothering me with questions, etc., etc. Therefore, I say I'll give you shares at a premium of 500 rupees. To somebody, I say I'll give you at a premium of 300 rupees. Is it possible? Supreme Court says yes, undoubtedly. There is nothing in law which says that, and the same issue also you cannot have. Supreme Court says this is nothing but a contractual rate between the company and the shareholder. Okay, now these are all English decisions. Now, if at all somebody tells you share premium को reserve में क्यों रखा, you can cite this Bombay High Court decision way back in 1969, where Bombay High Court says, moreover, as Mr. Palkhiwala has contended, there is really no contradiction between a reserve and a share premium. There is no contradiction between a reserve and a share premium. Premium received on shares are not strictly capital, says Mr. Palkhiwala in the court. As premiums received on shares cannot be said to be in the nature of capital, they are in a sense a reserve. They are in a sense a reserve. Therefore, Goduri LLP was not wrong when it placed share premium under the category of reserves. Right? And when amounts of premiums are credited to a reserve fund, they do not lose their character as share premiums. Just because I have credited it to reserves, they do not lose the character of share premium. Bombay High Court way back in 1960. Is share premium income? Undoubtedly not. Undoubtedly not. Forget first principles. Bombay High Court in multiple cases has taken a view in the context of transfer pricing, and issue arose that whether I should have the ALP determine of the issue of shares. Bombay High Court went into the language of those transfer pricing provisions and said it requires ALP determination of an item of income. Share premium is not an item of income. Where is the question of determining LLP? Therefore, that was Vodafone India Services 2014, followed by Gagandeep and Apik. Therefore, assuming it was income, you never needed a deeming fiction in 5627B. If it was income, then 5627B की जरूरत ही नहीं थी. 5627B आया is an acceptance of the legislature कि but for 5627B, share premium was never an item of income. Okay. Share premium in the context of 68 has been dealt with by Supreme Court in Lovely, Export, NRA, etc. Now let's look at analogies. Am I clear? I'm going slow. Am I clear now? No. Now what is share premium? If your logic is there, it could not have been distributed. Here it can be distributed. There, if distributed, even if general reserve was distributed by the company, what would have happened? The shareholder would have paid tax as dividend. Whereas here, when I distribute a reserve, a person doesn't pay tax. Therefore, are you going to tell me उसको भी tax करो? क्योंकि वहाँ तो आप distribute करते तो tax देते, यहाँ आप distribute करोगे तो tax नहीं दोगे, तो अब तो tax दे दो conversion के stage पे. I mean, is this analogy correct? The answer is no. Second, what Vikas said yesterday, that I can always capitalize share premium by issuing bonus shares, and then if I travel to a conversion route, does Goduri have any problem? No. Therefore, why should it have a problem if I do not capitalize it? Okay. Upon liquidation, as I said, a shareholder will receive his money back from the company and claim the entire cost. वही shareholder जिसने प्रीमियम सब्सक्राइब किया था, अगर वो लिक्विडेशन के डेट पे भी है तो उसको वो प्रीमियम का कॉस्ट मिलेगा. Am I right? यहाँ तो कोई कॉस्ट मिलने की गुंजाइश नहीं है. Therefore, these are two different governing statutes. You cannot decide taxation just because one governing statute prohibits or restricts usage of share premium, the other does not. Okay. Now let's critically analyze Goduri. Please understand that any decision is based on the facts. The facts of Goduri are very bad. You are having a LLP whose income is 12,000 rupees. You have about 13 crore of rupees by way of reserves, generating an income of 12,000 rupees in the year of conversion. You have unsecured loans. You have advances of 14 crore of rupees. Right? Now, all that generating no income. There was change in shareholders between the people who contributed premium to the people who were shareholders on the date of conversion. There was a transfer of shares. Nothing wrong. But all this colors my mind if I am a regulatory authority. Okay, boss, ये तो black or white problem without paying tax. Therefore, I must catch him somewhere or the other. Because I go with the biased mind, just as yesterday I said in my second presentation, that if I am an AO making an addition, I will definitely levy a penalty. Because I am biased, कि इसने गलत किया. Right? Therefore, same way here, the tribunal was colored. कि बॉस 12,000 रुपए की इनकम, 14 करोड़ रुपए के एसेट्स, पैसा एक set of shareholders die, दूसरे ले गया. If somebody would have gone deeper into it, that person who brought in money would have returned a capital loss in all probability. Right? Therefore, वहाँ capital loss, यहाँ tax free. I mean, those days are gone. So they will find some way, right or wrong, and then tell you High Court में जाके ले लो. Okay. Now, what was the case was selected for limited scrutiny on the ground के low income versus high loans and advances. 14 crore के advances दिए हैं, income खाली 12,000 है. So computer picked up the scrutiny on limited point and high interest expenditure, etc. Now, the AO said, I am taxing share premium. Mind you, he is not taxing capital gain. Mind you, he is not on 4713B. He is picking up share premium. even if I assume 4713B is violated, if 4713B is violated, you must tax me on capital gains, and that too not me. You must go and tax the company. Capital gain company को हुआ है, मुझे नहीं हुआ है. You go and tax the shareholder, but you cannot tax the LLP. AO did assessment of a LLP. AO did assessment of a LLP in which he taxed not capital gain, but he picked up one item from the liability side and said this item represents income. Okay. Now, what did I argue before the CIT appeal, who decided in my favor? I said that all assets and liabilities of the company have become assets and liabilities of the LLP. There is no violation at all. Therefore, conversion is exempt from tax. Alternatively, I said, assuming it is to be taxed, it must be taxed in the hands of the company, not me. Second alternate, assuming you have to tax me on the ground के successor हूँ मैं 170 subsection 2, then you have to tax capital gain. Capital gain is difference between consideration and cost. You have picked up one single item and taxed me. The CIT appeal examined 4713B. He says all conditions are satisfied. AO's observation about past history and the manner of share acquisition are irrelevant for the purpose of exemption. So CIT appeal is literally interpreting the law, picking up one transaction, examining it on the touchstone of clauses A to E or F, whatever it is, of your proviso, and says everything is satisfied, I am deciding the issue in favor. Both came before the tribunal. SSC said CIT appeal is wrong, he should have tax share premium, and revenue said that, and SSC in his CO said that CIT appeal failed to adjudicate the legal ground. What was the legal ground? The legal ground was limited scrutiny था. Why did he expand the scope? वो उसने adjudicate नहीं किया. Right? Now tribunal condoned the delay, etc. Now let's come to the direct point of what is tribunal saying. For exemption to apply, assets and liabilities of company must transfer to LLP with the same character. ये कहाँ से आ गया? With the same character, ये words कहाँ से आ गया? The law does not say. Tribunal is reading words into condition A of the proviso. Can tribunal read? The answer is even the Supreme Court cannot read. Right? Therefore, there is no way this argument is. Then tribunal says, however, once placed in reserves and surplus, it becomes profit available for distribution after 3 years. Why after 3 years? Even the very same minute. Why do you want me to wait for 3 years? The character of liability changed on conversion. First, is it a liability? Liability means liability to an outside world. It's a business entity because I am doing a double entry system of accounting. I have to record liability of a shareholder. There is a business entity concept. I mean, FYJC accounts, they taught us. Okay, business is separate from the owner. Therefore, business says I have to pay to the owner. But that does not mean it becomes a liability to an outside world. And when clause A says all assets and liabilities, it is regarding liabilities to the outside world, not liability of the business to its owner. Okay. The character of liability changed on conversion. It was no longer restricted as it was in the company. This meant condition A was not satisfied. Who said that? Is it correct? Tribunal may say what it feels. That is because it has colored its mind. Okay, here is a person who has converted 13 crore of rupees from black to white without paying tax. Then, since the conversion was a transfer, we have no dispute with that. And since security premium cannot be shown as reserves and surplus in LLP, who said? Who said? It was not a distributable profit. But it was not distributable profit even for the company. But Companies Act Schedule 3 or your erstwhile Schedule 6 still shows it under the head reserves and surplus. Right? So, just because it is under reserves and surplus, it must be distributable is again a fallacious reasoning. Right? And therefore, they say, I am bringing it to tax under 56(1). Now, what is 56(1)? Income from? But first it has to be income, no? First it has to be income and then income from other sources. Is it income? We saw 3 Bombay High Court decisions. Share premium is not income. Even assuming it is income for the company. Even assuming it is income of the company, it is income in the year in which share premium was received. Where is the question of taxing it? Now. Okay. So this was the tribunal's ruling finally. Then let's look at what are the deficiencies in the thinking. Who's thinking? First the AO and then the tribunal. The AO in his order has not mentioned anything about which section is the AO. Therefore, there was a failure on the part of AO to identify the correct provision for taxation. Right? Whether 45 applies or 56 applies or any other provision applies, AO is not talking of anything. He is just picking up share premium and taxing it. That's it. As simple as that. Then the wrong person is taxed. Assuming it is to be taxed, capital gain in the hands of the company, share premium, if it is income, it has to go in the hands of the company. So this is the second fallacy of the AO. Third, AO has not analyzed conditions of the proviso. He should have gone one by one as CIT appeal went into each of the conditions of the proviso. What is wrong in the order of the tribunal? Its reading of condition A is fallacious. What did tribunal say? Assets and liabilities must retain the same character. Those are the words tribunal is reading into the law. They are not there in the law, right? Then, tribunal wrongly applied 56(1) to a capital receipt. Third, tribunal did not deal with the argument of the assessee of transferor versus transferee, right? Who is to be taxed. This was a serious and a strong argument. Tribunal does not deal with that at all in the order. Last, CIT appeal was right on wrong person taxed, but the tribunal bypassed that argument. It is written in the order that CIT appeal has dealt with this, but tribunal is reversing without giving any reasons. Therefore, I would feel that the tribunal was colored by the fact that undistributable money is being laundered. Now, you need to ask yourself a couple of questions. Can 56(1) reach a capital revenue receipt, or does revenue need a specific deeming fiction? Obviously, the revenue needs a specific deeming fiction to capture capital receipt under section 56. Right? And you have 56(2)(10) is an example of a capital receipt being captured under 56, but there is a specific provision. So you may enact a provision and you tax it. I've got no issues on that. Is conversion a transfer? Is the correct assessee the LLP or the company? If it is a transfer, the correct assessee is the company. The capital gain in the hands of the LLP as a successor has to be computed in the like manner and to the same extent as it would have been done in the case of a company. Right? Thus changing the distributable character violate condition A? To my mind, no. Now, how do you defend your case? You say that Goduli was a LLP with no substantial activity. If you have converted a company into LLP, that LLP is doing business, that by itself is a strong point of distinction. Okay, there it was a shell LLP, here is a real LLP. If you have not transferred, if the shareholders who contributed the premium are the partners, nothing like it. Even if they are not, the case does not change legally, but if they are the same, the argument of laundering goes away. Because I myself contributed premium, that money is again coming to me, so where is the question of any laundering? But normally, this is not what happens. Money actually gets laundered and travels from the company to LLP. If it is not withdrawn from LLP, but is used in the business, nothing like. Right? Now, I am not touching upon GAR. I am presuming GAR does not exist. Because the first question, if I were the AO, I would ask is, why did you convert yourself into LLP? If your answer was security premium nikalne ke liye, then there is no commercial purpose to the transaction. Right? Then there is no commercial purpose to the transaction. You have to give me a commercial reason. Why did you convert your company into an LLP? Okay. Now, assuming everything in favor of the revenue, is share premium a part of accumulated profit? The answer would be undoubtedly no. Answer would be undoubtedly no. Share premium is not a part of accumulated profit. Now, where do I get authority from? You get authority from the decision of Mr. Chidambaram, M.A. Chidambaram. Now, under Companies Act, share premium can be used for the following purposes. Therefore, it indicates that it was not distributable profit there. Therefore, when it travels here, also it does not become an accumulated profit. It does not become an accumulated profit. Maybe it is available, but it is not certainly a part of accumulated profit for your condition F in the proviso. Mind you, condition proviso E expressly triggers only when there is a payment. Assuming share premium is accumulated profit. Is it paid? Merely because I have brought it under the head reserves and merely because there is a potential possibility of being distributed does not mean that the condition stands violated. Condition stands violated when there is actual distribution and not potential distribution. Right? Condition must be read as prospective and not retrospective, right? Now, when I convert a company into LLP, obviously share premium has to go either as partner's capital or as reserves and surplus. There cannot be a third method of accounting. You cannot expect me to perform the impossible. Book entries during corporate reorganizations cannot be taxed. Accounting entry does not alter the legal character of the payment. Even under Companies Act, shareholder would have received back the amount, as I said, either on liquidation or by transferring the shares. So that amount was available to him. In fact, even as a deduction under the LLP route, it is not available to him as a deduction. He may have to pay tax on that. Okay, now let's look at some decisions. Export overseas, Bangalore Tribunal said that conditions need to be interpreted strictly. Pipavav, defense and offshore, share premium constitutes a capital reserve and not a revenue reserve or accumulated profit. Therefore, share premium is not accumulated profit. Bombay High Court in General Insurance Company, share premium is a capital receipt, does not partake the character of revenue profit or accumulated profit. Madras High Court held share premium does not form part of profits and cannot be treated as accumulated profit. So you have enough precedents to say share premium is not the same thing as accumulated profit. Therefore, your condition of 3 years also does not apply. I'm not saying violate it, but all that I'm saying is that if you are caught, you have these defenses available. Fine. Now, the nature, is it not that the nature of a receipt, whether capital or revenue, is determined at the point of receipt? At the point on time when I receive an amount, I have to decide whether this is capital or रेवेन्यू, इट कैनॉट हैपन कि वो आज रेवेन्यू है कल कैपिटल हो गया, या आज कैपिटल है और कल रेवेन्यू हो जाएगा, जस्ट एज द ट्राइब्यूनल डिड ओवर हियर, और दैट इज नॉट पॉसिबल इन इनकम टैक्स बाय एंड लार्ज. आई एम अवेयर दैट इफ यू रिसीव अ ट्रेड डिपॉजिट where your contract itself says that if you don't pay me money, I will adjust out of deposit, or a security deposit in a renting transaction, then yes, at the time of receipt it was capital, subsequently it became revenue in nature, but that is where the contract originally anticipated. That was a default situation which was known in advance at the point in time when I received the amount. Okay. Now mere accounting entry cannot determine taxation. Direct the Bombay Tribunal on LLP on section 68, share premium itself, where the tribunal holds a mere accounting entry without actually monetary benefit to partner does not constitute payment within the scope of 47(13). Am I clear? Absolutely clear, right? So then you have Bisreen Realtor's principle, which says that no amount is paid to the partner out of so and so. Since the accumulated profits were negative, there was no scope for distribution of any amount from accumulated profit, and therefore exemption cannot be denied. The ratio to be drawn is that reference point for accumulated profit is the accumulated balance of profit standing in the accounts of the company. इधर क्या हुआ? The company had negative profits, which traveled to the LLP. Then the partners withdrew money. The issue was, have they withdrawn accumulated profits? The question was, where is accumulated profit? Accumulated profit वहां से आना चाहिए, जो वहां था वो ट्रैवल होता है. यहाँ पे same logic, share premium was not accumulated profit in the book of a company. So it does not become accumulated profit when it travels, and for that you can rely on this Mumbai Tribunal in Bisreen Realtors. Then argument that share premium transforms into distributable profit ignores the fundamental principle that character of receipt is determined at the point of time of receipt, which I just said. No actual violation at the time of conversion, flawed interpretation. Okay, now yesterday there were discussions going on. A benefit item. I mean, does it constitute a benefit? Now, what is benefit? You have the word benefit at several places in the law. Value of benefit or amenity. Value of benefit or perquisite received by a director or a specified employee. Right? 224(4) may be value of benefit. Now, what is benefit? Benefit, according to me, has to be understood as I become economically better than I was earlier. I become economically better than what I was earlier. That is a benefit. Now, because my net shareholders' funds traveled here and remained as partners' capital or owners' fund, there is no benefit whatsoever. Benefit has to mean that I have become richer than what I was earlier. Because of this transformation, I have not become richer. Then yesterday somebody was discussing, so loan diya to kya? Right? I don't know which group, but then this point arose. Ki loan diya to kya? Now, what is a loan? Then somebody said interest free, and then somebody said some 12% something, and I said a Marwadi lending rate would be 24%. So will you compare it with that, or will you compare it with the State Bank rate, or will you compare it with an NBFC rate? Right? Now, this issue also is settled by Supreme Court in the context of salary taxation, where interest-free loan was given by a company to a employee who was a director, and department wanted to tax it as a perquisite. Supreme Court went threadbare into the issue, and in VM Salgaokar's case, Supreme Court said loan given, even though interest free, does not constitute a benefit. Therefore, though not stated so clearly, the proposition at the back of the mind is that I have not become economically richer. मेरे को टेम्पररी यूज आया होगा लोन लेने से, बट वो मेरे को रिपे करने का है. Am I richer by that amount? The answer is no. Therefore, if I have to explain in one line, the answer would be I must become richer. Then there is a benefit. If I have not become richer, there is no question of any benefit, right? So, what is the benefit? Even if you go to the dictionary, benefit is an advantage or a profit or anything contributing to improvement of a condition. Now, you may say loan business is improvement of a condition. To my mind, no. If a person derives any advantage, it can be said that he has benefited. If he gains something monetarily or otherwise, it can be said that he has benefited. Now, all this is from Gujarat High Court in Kamalagiri Gautam Sarawai's case. Now, this we dealt with. Even assuming share premium is to be taxed, it must be taxed in the hands of the company in the year it was received, not to be certain. Right? Now, I think I have covered all the aspects of Goduli. If at all you feel that I have missed out anything or there are any questions, I am prepared to take it. But be very clear, at this speed we may not finish all the three. LLP? Anji. No, sir. If you read the word convert, the definition, convert itself means transfer. LLP Act में, see, there are two, and what was your second issue? So share premium is not I think that is the pattern of Aravali. I think you are referring to mixing between Aravali or no. We will examine that offline. The second part, let us leave it. The first part, vesting, is what Himachal Pradesh High Court has accepted. Right? But if you get into the language of the LLP Act, it says shall stand transferred and vested. So therefore, first there is a transfer and then there is a vesting. Income tax law will tell you transfer is my domain. So there is a transfer, whereas if you go to part 9 of the Companies Act, the language was slightly different. So that is how in celerity, Bombay Tribunal has distinguished taxpayer. There are enough arguments to support that the meaning of the word transfer and vest is the same as it was in the corresponding language of Part 9 of the Companies Act. But rightly or wrongly, as on today, no tribunal is prepared to take that position. You may be right, but that will happen only at a high court level. It is not going to happen. Very recently, while the matter was argued in a Bombay tribunal, name of the case I'll give you offline, I don't remember it right now. The member on the bench showed willingness to agree with the counsel of the SSC. Asked the counsel of the SSC to give a written note. The written note was given. And finally, when time came to dictate the order or sign the order, all those arguments were brushed aside. Matter was decided in favor of the SSC, so that SSC does not remain aggrieved. On the ground, there is no capital gain. Book value minus the cost, answer is 0. No capital gain. Therefore, SSC has no grievance. The same thing happened in celerity. Same thing happened here. So where tribunals know, but they are not sure. They don't want to take that bold step because it is interpreting a language in a particular manner. I'll give you one more argument. Under Companies Act, any transfer requires two people existing at the same time. I cannot die and then you get it. You and I must coexist at the same time when the asset is being transferred from me to you. Under Part 9, it was that a firm dies and a company simultaneously comes into existence. So there was no gap. Whereas if you go to the schedule of the LLP Act, there are 3 steps. A company is formed, LLP is incorporated, assets are transferred and vested into the LLP, then the company is liquidated. Now therefore, I can say that there are 3 steps, 1, 2 and 3. There is a split second gap between step 1 and step 3. Therefore, for that split second, both are existing is another way of distinguishing. Therefore, let us go with the settled proposition कि capital gain तो नहीं आएगा, LLP के हाथ या कंपनी के हाथ, shareholder के हाथ में आएगा. Okay. Now, anything else? Do I go over to the other case study on corporate restructuring? Haji? Sorry? Shareholders? Sorry? Haji? Capital gains. The amount credited to their capital account is the consideration. Correct? The cost of the share must be something else. Right? So, full value of consideration, which is amount credited to capital account minus the cost of the share, will be capital. Sorry? Of course, if conditions of 13B are not satisfied. If conditions of 13B, all the 6 provided. And again? If you pay tax, if you are prepared to pay tax, then you do everything that you want. Nobody is stopping. Okay, now here also, if I have to deal with your case study, I can finish it in 10 minutes time and be done with it, or I can go step by step into the 4 options given in your proposition, namely dividend, capital reduction, buyback, liquidation. Any other would be 47(13)(b). Okay. Now payout strategies. It's taken nearly 56 minutes for the first, as against 40. Sorry? That is your view. Organizations may be having a different. Okay. Now, sorry? Unanimous view of the participants. Okay. Now, various payout options. Dividend, which could be interim, final or special. Buyback, capital reduction, voluntary liquidation, conversion to LLP. Dividend, a simplest form, no janjat. Maybe interim, board of directors can decide, pay, final, AGM approves it, special dividend, maybe the general meeting approves it. Right? Dividend can be paid only if company has distributable profits, not otherwise. Dividend may be paid either out of current profits or of accumulated profits or out of monies provided by the government. Distribution of dividend will require compliance with sections 123 to 127 of the Companies Act. However, when you travel to income tax law, you have an inclusive definition of dividend in section 222 of the 1961 Act. Therefore, what may not be dividend under Companies Act may still qualify as dividend under your income tax law. A loan given to a shareholder is not dividend under Companies Act, but for income tax law, it is covered by 222E. The expression Finance Act has 2020 has abolished dividend distribution tax. Therefore, tax on dividend will be only in the hands of the shareholder. Company is required to deduct tax under 194 for dividend distributed to resident shareholder at 10% for dividend distributed to a non-resident shareholder under 195. The rate of tax will depend upon the slab rate which is applicable to a shareholder if he is an individual, if he is a company, depending on what rate of tax applies. Dividend income is always to be taxed under the head income from other sources. So your controversy like rental income, business है क्या house property है, that does not arise. Shares may be capital asset, share may be stock in trade. Dividend will always be income from other sources. While computing the amount chargeable to tax as dividend, you cannot get deduction in excess of 20% of the dividend income. Section 57 restricts the deduction to a maximum of 20% of the dividend amount. The rate of tax, I am not getting into, all of you are aware that for an individual it could be 30 plus whatever is the surcharge. Domestic company, please bear in mind, even if it is governed by 115BAA, is entitled to a deduction under 80M. 80M is a section which grants deduction to a company receiving dividend, which in turn distributes dividend, so that there is no double taxation of dividend. Okay. Now advantages, disadvantages, forget it. Now come to capital reduction. Now what is capital reduction? Which is a section dealing with capital reduction? Section 66. I can also attain the same purpose by going through a scheme under 230 to 233. So, answer same, approach 2. Go via 66, go via NCLT approach. Okay. Now, under the 56 law, I required approval of the High Court. Now I need NCLT approval. That's only a small. 66 provides me a statutory flexibility. It says that a company can reduce capital in any manner, right? Thereby enabling companies to structure, right? Now, 3 broad methods of capital reduction are envisaged in Companies Act Section 66. Number 1, extinguish or reduce the liability on any of its shares in respect of share capital not paid up. मतलब क्या? पार्टी पेड शेयर है, आप जो पार्ट नॉट पेड है उसका लायबिलिटी कैंसिल कर दो, उससे कुछ फर्क पड़ेगा क्या? मुझे देना था, अब मैं नहीं दूंगा. फर्क कब पड़ेगा? लिक्विडेशन अगर होती और कंपनी लॉस में जाती और ये कैंसिल नहीं हुआ होता तो सम लिक्विडेटर वुड हैव सेड बॉस जो अनपेड पार्ट है वो दो. लेकिन अगर ये कर दिया स्टेप तो लिक्विडेटर नहीं आ पाएगा बिकॉज दैट लायबिलिटी इज कैंसल्ड टू द एक्सटेंट इट वाज नॉट पेड अप. कैंसल एनी पेड अप शेयर कैपिटल which is lost or is not represented by available assets. तो मेरे पास इधर में 10 करोड़ का कैपिटल है, इधर में 8 करोड़ का लॉस है. My balance sheet size is unnecessarily exaggerated. I go through a capital reduction scheme and I say cancel the loss against the paid up capital. Therefore, इधर का लॉस 10 करोड़ में से 8 करोड़ कैपिटल को खत्म कर देगा तो मेरे को बचेगा सिर्फ 2. कंपनी की बैलेंस शीट में कैपिटल हो जाएगा 2 करोड़, वो बाजू से लॉस हट जाएगा, 10 बिकम्स 2. Am I clear? इसका टैक्स कॉन्सिक्वेंस आएगा क्या? नो. कैन आई नॉट क्लेम अ लॉस के बाद मेरा 8 करोड़ रुपया तो गया, लॉस दे दो मेरे को दूसरे कोई कैपिटल गेन के सामने. Yes or no? No. Anybody for yes? Yes. Why? Can I not say computation mechanism fails? There is no consideration. Sorry? I had 10 shares. Now I have 1 share. ठीक है चलो. हाँ. पर लेकिन कैपिटल गेन कंप्यूट करने के लिए फुल वैल्यू ऑफ कंसिडरेशन चाहिए ना, वो किधर? वो तो लॉस के सामने सेटअप हो गया ना आपका. Last, huh? I'm talking of shareholder. कंपनी ने क्या तो कुछ हुआ ही नहीं ना. So in the hands of shareholder, what? Then you answer now. So therefore you are saying computational mechanism phase theory does not apply. Somebody can say computation mechanism fails because computation mechanism requires full value of consideration, requires cost of acquisition, requires cost of improvement, and then I get capital gain as a arithmetical exercise where this is not conceivable. The computation mechanism is, what was that, BC Srinivasa Shetty or whatever, वो कॉस्ट साइड पे था, उसको मैं उल्टे साइड अप्लाई करने का पूछ रहा हूं, आई एम नॉट सेइंग. ओके, देन पे ऑफ, mark the word, pay off, paid up share capital which is in excess of the needs of the company. कंपनी के पास शेयर कैपिटल है 10 करोड़ का, उधर बैंक बैलेंस पड़ा है, कंपनी को पता नहीं क्या करने का पैसे का, तो कंपनी बोलती है कैपिटल रिड्यूस करो, पैसा दे दो, एनीवे शेयर होल्डर जाके 15% कमाएगा, हम तो 2% कमा रहे हैं, 3%, डिस्ट्रीब्यूट एंड फिनिश इट ऑफ. Am I clear? So these could be the 3 options which are given by section 66 of the Companies Act. Right? Forget all this. This is all the company law provisions. Okay. The only point which the regulator sees is that you are not adversely affecting the rights of the creditors. या तो उनका कंसेंट लेके आओ या एनसीएलटी को एस्टैब्लिश कर दो कि बाय व्हाट आई एम डूइंग no creditor is adversely affected, therefore you please approve my scheme. Right? Nowadays, the purposes for which capital reduction is being used gives rise to significant advantages to the shareholders, and therefore there is a greater scrutiny by the regional director as well as by the tax department once you go in for any of such schemes. Okay. Let's concentrate on income tax requirements of capital reduction. This was only a background to understand what is capital reduction. Now, section 222 clause D regards distribution to shareholders on capital reduction to be dividend to the extent company possesses accumulated profits. In my example, 10 crore of share capital, 8 crore of cash balance, 8 crore of cash balance, and there is accumulated profit of 3 crores. The reduction scheme says distribute 8 crores, reduce capital by 8 crores. So cash बाहर जाएगा 8 करोड़ से, ये बाजू से शेयर कैपिटल 8 करोड़ से कम हो जाएगा, therefore share capital will remain 2 crores. But when the shareholder receives 8 crore rupees, 3 crore will be regarded as dividend under 222D, and the remaining 5 crores will become chargeable, if at all, under capital gains. We are going to discuss that. Right? Now, one will have to keep in mind the provisions of section 50CA if you are dealing with an unlisted company, and also 50D. Now, there can be a non-cash transfer of capital reduction, or there can be selective cancellation. Like if you have studied your case study, there are cross-company holdings. AB में XYZ और PQR का holding है, XYZ में PQR का है, PQR में XYZ का है. Now we can have a composite scheme under which we go to NCLT. And we say, boss, look here, consider all of us together. It is all these 3 companies plus A and B. We are all agreeing to cancel all the intercorporate holdings. Cancel all the intercorporate holdings. Nobody will get any rupee, but all the intercorporate holdings will get cancelled. Now what will happen? The minute your scheme is approved, all your cross holdings are cancelled without consideration. There is no question of any capital gains tax, except if at all 50CA etc. applies. Right? Whether 50CA will apply or not, we will come to. Am I clear? Am I clear? So have a composite scheme. आपके केस स्टडी में ऑब्जेक्टिव था इंटर कॉर्पोरेट होल्डिंग्स को खत्म करो. Therefore, file a composite scheme in which all the three companies are parties. The other two shareholders, as shareholders, will give their consent that we have got no issues. AB will cancel shares of XYZ and PQR. XYZ will cancel shares of PQR. PQR will cancel shares of XYZ. The balance sheets will become clean. There will be no inter-corporate holdings. You have escaped taxation. You have escaped taxation, right? So this is where you do not have consideration for capital reduction. This is what I call it as selective capital reduction. मेरे को इनको बाहर निकालना है, मैं डायरेक्ट सेटल करूं, उससे मैं स्कीम के थ्रू गया, इनका भी कंसेंट लिया, and we are out. He says, okay, I don't mind, you cancel my shares, right? Now, 56(2)(10 का applicability you may have to examine, right? All this is theoretical, कुछ आने वाला नहीं है. Now, another question arises that if cancellation is for a consideration between holding company and a wholly owned subsidiary, 47(4) tells me that any capital gain arising on transfer of a capital asset by a holding to a wholly owned subsidiary is exempt. Now, supposing subsidiary is cancelling 50% of the share capital. Subsidiary is cancelling 50% of the share capital and giving me consideration for that. There will be capital gain in the hands of the holding company for that 50% which is cancelled. Can I not claim that as exempt under 47(4)? On the ground that what has given rise, the capital reduction by the wholly owned subsidiary has given rise to a capital gain, which capital gain satisfies all the conditions of 47(4) and therefore it is exempt from tax. Therefore, I am just giving you various options. It was very easy for me to deal with the case study in 5 minutes. I am just giving you various options to give you a flavor that capital reduction can be used in various ways to achieve different objectives. Okay. And now tell me, reduction in face value, will it constitute a transfer? And does it make a difference if it is preference share or it is liquidation? A transfer means what? Transfer means what? मेरे पास कुछ था, वो आज नहीं है. Am I correct? That's the meaning of transfer, no? Now, if 100 rupee share becomes 50 rupee का share, number of shares same. 100 रुपए का एक शेयर था, अब 50 का होगा. रिडक्शन आ गया फेस वैल्यू में. Is it a transfer or no? Will the answer change if it was equity or preference? Sorry? होना चाहिए. होगा क्या नहीं? For preference shares, definitely it should change. Because preference share में अगर मेरा शेयर 100 रुपए का था तो ऑन लिक्विडेशन मुझे 100 रुपया मिलता, मुझे डिविडेंड 100 रुपए पे मिलता. अब आपने शेयर 50 रुपए का कर दिया तो मुझे लिक्विडेशन पे सिर्फ 50 मिलेगा, डिविडेंड 50 रुपए पे मिलेगा. और अगर डिविडेंड इज इन एरियर्स फॉर मोर देन 2 years, मेरे पास वोटिंग राइट्स है अंडर सर्टेन प्रोविजंस ऑफ द कंपनीज एक्ट, व्हिच वोटिंग राइट्स will be with reference to 50 rupees. Earlier they were with reference to 100 rupees. Therefore, there are 3 incidents in case of preference shares. Therefore, reduction in face value of preference share, to my mind, undoubtedly constitutes a transfer. Now come to reduction in face value of equity share. Equity share का face value reduce किया. Is it a transfer or equity shareholder का क्या राइट है? हम चारों 25% शेयर होल्डर हैं, 100 रुपए के शेयर. डिसाइड किया इसको 50 रुपए का शेयर कर दो साहब आज से, राइट? लेकिन शेयर होल्डर अपन चारों ही रहे. क्या फर्क पड़ा? कुछ फर्क पड़ा? वन वे कुछ फर्क नहीं पड़ा. क्या फर्क पड़ा साहब? आपके पास 25% एंटाइटलमेंट था एसेट्स में, आज भी 25% एंटाइटलमेंट है. करेक्ट? आपके पास वोटिंग पावर 25% का था, आज भी आपके पास वोटिंग पावर 25% का है. Therefore, reduction in face value of equity share does not constitute a transfer is one view. Right? On the logic that look at the percentage interest. Don't look at the face value. The other argument could be, no boss, you had ₹100 का शेयर, वो आज 50 का हो गया, आपका आधा कॉस्ट तो गया मार्केट, राइट? सेक्शन 55 बोलता है जहां पे भी ये रिकैरेक्टराइजेशन होता है, ओरिजिनल कॉस्ट को जाके रियलाइन करो. अगर मेरे पास कोई लिस्टेड कंपनी के शेयर हैं जो मैंने खरीदे थे, उस समय उसका फेस वैल्यू था ₹10, अब उसका फेस वैल्यू हो गया ₹2, तो मैं क्या करता हूँ, 55 टेल्स मी के उसको 1/5 कर दो. फॉर एवरी शेयर आपका ओरिजिनल कॉस्ट ₹10 के शेयर का था, अब आपका शेयर ₹2 का है, तो वो जो ओरिजिनल कॉस्ट था उसका 1/5 दे लो एंड एट्रीब्यूट इट टू ईच शेयर. देयरफॉर वन वे इज के कंसेप्ट of share in income tax law is the entire share, not my shareholding interest or the proportionate interest in the company. Okay, we will come to it. Now, if you want to understand capital reduction, these are the minimum decisions which you must study. You begin with Anarkali Sarabhai, Supreme Court, which is a decision on preference shares. Kartikeya Sarabhai, again a decision on preference shares. Jai Krishna Harivallabh Das, Gujarat High Court, deals with liquidation. I have taken here for a purpose to explain a proposition. G. Narasimhan, Supreme Court, we do not know equity share था कि preference share था, नहीं मालूम अपने को. Neither the Madras High Court order from which the matter travelled to Supreme Court, nor the Supreme Court order explains whether the shares before in the facts of that case were equity or preference, because to my mind answer will change depending on whether it is equity or preference. Then you have Bennett Coleman, Mumbai Special Bench decision, where there was no consideration. ₹100 का शेयर था, उसने 50 का कर दिया. नेक्स्ट स्टेप उसने क्या किया, 250 का मर्ज करके ₹100 का कर दिया. He did not pay any money. So ₹100 share, first he said I am reducing the face value, ₹50 का हो गया. Then he said दो ₹50 के शेयर में कंसोलिडेट करता हूँ और उसको वापस ₹100 का कर देता हूँ. Right? The SSC claimed huge loss and he said give me a loss. Mumbai Special Bench had to examine whether there is a transfer. If yes, there is no consideration, everything was under the scheme. Therefore, should I give him a loss or should I not give him a loss? Special Bench said I am not going to give you a loss. We'll come to Tata Sons, identical to Bennett Coleman, but taking an exact opposite view. Okay, Jupiter Capital travelled from Bangalore Tribunal to Karnataka High Court and then to Supreme Court on equity shares, deals with capital reduction, Mumbai Tribunal case scheme. Let's very quickly look at what happens. Anarkali Sarabhai, SSC purchased preference shares for a price less than the face value. Preference shares का redemption हुआ, capital reduction नहीं हुआ. Redemption हुआ, the SSC got a price greater than what he had paid for. Supreme Court said there is a transfer. Redemption constitutes a transfer is what Anarkali Sarabhai is saying. Nothing beyond that. But rightly wrongly, Kartikeya Sarabhai follows Anarkali. Now in Kartikeya Sarabhai, the court was concerned with taxability of amount received on reduction of face value of a preference share. तो preference share का face value कम किया कंपनी ने, लेकिन उसके लिए उसने उसी समय पैसा दे दिया. Now because you got money and the face value reduced, Supreme Court said there is a transfer. Supreme Court said that yes, there is a transfer for three reasons. Your right to dividend has gone down. Your right to participate in the assets has gone down. Your voting right to a certain extent has got reduced. This results in extinguishment of rights and therefore there is a transfer. There is consideration received. Therefore go and compute your capital gains. That's what Supreme Court in Kartikeya Sarabhai said. Jai Krishna Hari Vallabh Das, Gujarat High Court. Case of voluntary liquidation. SSC got nothing. The assets were not sufficient to pay the equity shareholders. The SSC said, मेरे को loss दे दो. Consideration 0. मेरा cost इतना. Therefore, there is a capital loss. I will either carry it forward or set it off against other capital gains. The argument of the department was that 46 requires amount received. There is no amount received and therefore computation will not proceed at all. Gujarat High Court said, what nonsense. If he would have received 1 rupee, you would have computed and given him a loss. Now just because he does not receive that 1 rupee and receives 0 rupees, you are saying I will not give him a loss. Gujarat High Court says this is not acceptable. This is not a proper interpretation of the law. Therefore, in a liquidation where shareholder receives nothing, the cost of the shares will be allowed as a capital loss, says Gujarat High Court. And the reason I have taken this is to come to that point कि capitation mechanism phase वाला concept नहीं है. Okay. Now, G. Narasimhan, face value of the shares was reduced. Face value को कम किया 1000 रुपए से 210 रुपया किया. That is only 21%. उसके बदले में उसको क्या दिया? उसको कैश दिया और some properties of the company were also distributed. Supreme Court said, wait. What do you do? Compute value of the properties. Add money value received. Total consideration आ गया. To the extent it is represented by accumulated profit, it will become dividend. बाकी का amount becomes your consideration. Consideration for what? Consideration for reduction in the face value. Consideration for reduction in the face value. Compute capital gain. But what should be the cost? When I subscribe for a share of 1,000 rupees. Can I say that when I subscribe for a share of 1,000 rupees, whatever I paid is divided by 1,000 is the cost per rupee of face value? To my mind, no. But because Supreme Court decision does not state whether it is for equity or preference, it goes ahead on the basis that compute. I have underlined in bold what is doubtful according to me. In view of this judgment, the property and money received from the company on reduction is a capital receipt subject to section 45. G. Narasimhan blindly follows Anarkali. Anarkali was a case of preference shares, it was not a case of equity share. You cannot apply the ratio of preference share to an equity share. So I do not know. Then they say in para 12, the original cost to that shareholder of the acquisition of that right in a share which stands extinguished. Now how do I know that right in a share which stands extinguished? Out of 1,210 is remaining. Therefore what? 790 is extinguished. So 790 का cost निकालो. कैसे निकालूंगा? I don't know. Unless I do cost divided by 1,000 multiplied by 790. I mean, whatever cost I paid was for 1,000 rupees of paid up. Therefore for 790 which is extinguished, how much is the cost which I paid? I mean, that's the only thing I can think of. Anyway, now the company said, the court said, company has transferred property in lieu of return of 790 per share. कंपनी 1000 रुपया रिसीव किया था, अब वो 790 रिटर्न करता है, उसके बाद 790 रिटर्न करने के लिए नहीं है तो आपको प्रॉपर्टी प्लस कैश देता है. सो देयरफॉर देयर इज अ ट्रांसफर इज व्हाट सुप्रीम कोर्ट इज सेइंग, राइट? नाउ द प्रॉपर्टी हैज नॉट बीन सोल्ड, सो ऑन एंड सो फोर्थ. फाइन. नाउ कम टू बेनेट कॉलेमन. आई हैव ऑलरेडी एक्सप्लेन्ड यू बेनेट कॉलेमन विद अ डिफरेंट एग्जांपल. आई सेड 100 रुपये का शेयर था, एक्चुअली 100 का नहीं 10 का था, 5 रुपये के उसने कर दिया, फिर वो 2 शेयर को कंबाइन किया और एक, राइट? तो एसएससी सेड मेरे को लॉस दे दो, मेरे को लॉस दे दो. क्योंकि प्रोसेस में क्या हो गया, मेरे शेयर्स तो आधे हो गए, नंबर ऑफ शेयर्स हाफ हो गए, फिर उसके बाद में कंसोलिडेट किया तुमने, राइट? नाउ देयरफॉर द बट देयर वाज नो मनी रिसीव्ड, देयरफॉर द एंटायर कॉस्ट was claimed as a loss on account of capital reduction. the tribunal head, this is where tribunal is applying what I was saying. कि मेरा क्या कम हुआ, कुछ कम नहीं हुआ. Because my ratio remains the same. Tribunal is saying since value of assets of the company immediately before and after reduction remain the same, and moreover assess's proportionate share in the assets also remain the same, loss if any can be regarded as notional loss. बोला क्या लॉस हुआ तेरे एसेट्स में शेयर उतना ही है, वोटिंग राइट उतना ही है, तो काय का लॉस. Then he says SSC has basically argued that original shares got extinguished and new shares came. If the argument is that earlier shares have been replaced or substituted by the new shares, then the same would have not amount to transfer at all. Now this is a beautiful finding, can help in several ways. He is saying one set of shares exchanged for another set, there is no capital gain. Special bench of Mumbai Tribunal. Therefore, up to tribunal level, this decision will prevail unless reversed by the High Court. In that case, it would be merely a case of substitution of one kind of share with another, which has been received because of the rights to the original shares on reduction of capital. It is well settled that even if transfer had taken place, unless and until some consideration is received, transfer of such asset would not attract provisions of Section 45. What two people said is what special bench is saying. To my mind, wrong. For two reasons. Number one, Gujarat High Court direct. Forget Gujarat High Court. Go back to B.C. Srinivasa Shetty. When does that theory of B.C. Srinivasa Shetty work? When cost or consideration cannot be conceived of. If you go back to section 66, which I showed you, I had highlighted in bold item number 3. Pay off the paid up capital, which means payment can arise. It is not arising is a different thing, right? Therefore, computation mechanism fails. That argument cannot work in the context of section 66 because the law envisages payment, and this has been accepted subsequently by Tata Sons. They have looked at this provision and they have decided, right? The special bench says SSC has not received any consideration. What has happened is that ultimately number of shares has reduced to 50%, but nothing has moved from the side of the company. Further, SSC's percentage of shareholding before and after reduction is the same. The same पहले भी उसका 74.9 था, अब भी 74.9 है. Therefore कुछ transfer हुआ नहीं है. Right? Therefore, the Bennett-Coleman is going not by the number of shares. The Bennett-Coleman is going by the percentage of shareholding. Right? Then Bennett-Coleman is taking examples and saying कि अगर कंपनी फ्यूचर में प्रॉफिट करेगा और वो प्रॉफिट से बोनस शेयर डिस्ट्रीब्यूट करेगा, तो क्या आप बोनस शेयर पे टैक्स देने वाले हो? You will not give. Therefore, कंपनी ने अगर लॉस किया और उसकी वजह से तुम्हारा शेयर गया, so why do you want a loss? They are saying if profit of the company when it travels to the shareholder is not regarded as taxable because bonus share पे कोई टैक्स देता नहीं है, but I will say टैक्स देता हूँ क्योंकि बोनस शेयर का कॉस्ट आप आधा कर देते हो, बोनस शेयर का कॉस्ट आप नील एज्यूम करते हो. Therefore you are taking tax. That was not argued before Bennett-Coleman, right? Okay. Now Tata Sons. Now here was a case where कैपिटल रिडक्शन हुआ, एसएससी ने लॉस क्लेम किया, ईओ ने अलाउ किया. ओके, कंसिडरेशन रिसीव नहीं हुआ. कैपिटल रिडक्शन, नो कंसिडरेशन, लॉस क्लेम, लॉस अलाउड. सीआईडी इन्वोक्स 263 and says nothing doing, right? No consideration received, therefore you cannot compute the loss. Same thing as we were originally saying, okay, no consideration computation mechanism fails, right? The tribunal held reduction of capital is extinguishment of the right in the share and it amounts to transfer. Loss on reduction is extinguishment of right, amounts to transfer. It is an actual capital loss, not a notional loss, and therefore where SSC has not reduced any consideration, loss should be allowed. Now comes your last decision, or second last decision. Jupiter Capital, Supreme Court. The shareholding of the SSC company was reduced as a result of losses suffered by the investing company. Face value remained the same. Now mind you, यहाँ face value same रखता है वो, number of shares reduce कर देता है. एक बाजू loss है, वो set off करता है. The High Court approved the scheme, but directed the company to pay 3.18 crore. So scheme में शायद नहीं था, but High Court ने बोला nothing doing. You pay 3.18 crore and then you go and reduce. The SSC claimed long-term capital loss. Consideration था, right? The AO head reduction did not result in transfer. The AO head reduction did not result in transfer. Maybe he followed Bennett column. CIT appeal held extinguishment will involve parting of the sale of percentage of shares or divesting rights. Percentage remains the same, their theory. Tribunal reversed the order, High Court confirmed, Supreme Court said, I am following Karthikeya Sarabhai. Nobody argued कि Karthikeya Sarabhai's preference ये equity की बात कर रहे हो, right? So we'll have to still wait. Case team held, Mumbai Tribunal categorically says go by the concept of share, do not go by the concept of percentage of shareholding. So that controversy now gets settled by the Mumbai Tribunal in case stream. Okay. Now let's come to applicability of 50 CA. Will 50 CA apply to capital reduction? Assuming it applies, it will apply qua what? The value of the share which is being reduced, which includes the accumulated profit component. Therefore, from your fair value, you will subtract that part which you are attributing it to dividend and therefore accumulated profit. On the balance, compare it with your consideration. If at all you have to apply 50 CA. I will say 50 CA may not apply. Why it will not apply? Because 50 CA is an anti-avoidance provision. Meant for what? Meant for transfer of an asset which continues before transfer and after transfer. Here, as a result of capital reduction, the asset does not continue after transfer, it gets extinguished, and therefore there is no question of applying an anti-avoidance provision like 50 CA. However, this is an untested proposition. One will have to wait what happens, right? Now, where there is no consideration, can 50 CA apply? Where there is a capital reduction and there is no consideration received by you under the scheme, can 50 CA apply or no? That argument remains that 50 CA is meant for a bilateral transfer where the asset continues. Here the asset is not continued, and therefore where pursuant to an order of NCLT I enter into a certain transaction, then that is outside the scope of 50 CA. Now before I forget, the one point I missed in that Goduli case study. Once upon a time, there used to be amalgamation of companies under 391 to 394 of the Companies Act, 1956. In those days, the amalgamating company had share premium, which the scheme provided that when it travels to the amalgamated company, it will assume the character of general reserve. It was provided in the schemes like that. कि इधर का शेयर प्रीमियम जब उधर ट्रैवल होगा तब वो जनरल रिजर्व हो जाएगा. Exactly the same thing which your tribunal has considered. Nobody dared touch that transformation. How can you touch that transformation today? Right? That is High Court approved scheme. It was still a scheme. It is only an agreement. Whereas today you are doing under mandate of a law. So you are much stronger than what you were in those cases, right? So this I had missed out because it was not there on the slide. Anyway, face value reduction on that. Okay, forget this. Now buyback. Now very quickly, 1426 buyback regime has changed. 222F gaya, right? When you travel to 2025 law, the only downside is वो जो capital reduction वाला clause था ना, उसमें 222 में क्लियरली लिखा था बायबैक विल नॉट कॉन्स्टिट्यूट डिविडेंड. वो सेंटेंस अभी 25 एक्ट में मिसिंग है. लेकिन बायबैक विल बी टैक्स एज कैपिटल गेन, वो क्लियर है. प्रमोटर के हाथ में नॉर्मल रेट ऑफ टैक्स, बट हेड विल बी कैपिटल गेन. नॉन प्रमोटर के हाथ में द कैपिटल गेन का टैक्स, वॉट एवर, राइट. So that is as far as buyback is concerned. Very simple, nothing great to talk about. Voluntary liquidation, you are going to deal with section 46, which says that consideration received, first accumulated profit portion will be dividend, surplus over accumulated profit is full value of consideration. उसमें से आपका शेयर का कॉस्ट माइनस करो. क्वेश्चन में अराइज, सर कॉस्ट कब माइनस करने का? बिकॉज एसेट तो बिकेगा एक एक करके, पैसा आएगा इंस्टॉलमेंट में, टैक्स कब भरने का? पॉसिबल टू टेक अ व्यू लास्ट इंस्टॉलमेंट के टाइम भरने का, बट somebody may tell you नहीं, जो पैसा आ गया उसको फाइनल मान के टैक्स कंप्यूट करो, then your entire cost will stand deducted in the first installment itself, and thereafter you will go ahead. If the liquidator distributes the assets, this is what will happen. But if the liquidator sells the asset and distributes the price, then company will have to pay capital gains tax. Okay, fine. Now 222C, 46 we are all aware. So now let us come to the case study, so that we have some time for your depreciation. Is this your fact pattern? Mr. A है, दूसरी बाजू Mr. B है. You have a company AB which has 4 shareholders and 10 crore rupees of cash. Correct? You have PQR, which is the manufacturing company. You have XYZ, which is the financing company. You want that A should own PQR, B should own XYZ. This is what you want. You want to cancel all the cross holdings. All the cross holdings are there in the last box on the left hand side. Shareholding summary: AB Private Limited has 4 shareholders: Mr. A, Mr. B, PQR, and XYZ. PQR has 3 shareholders: Mr. A, Mr. B, XYZ, and XYZ has 3 shareholders: A, B, and PQR. What is the objective? This is what I was saying yesterday in the group. First, you have your present fact, then you have your objective in mind, that what you want, then decide the route which you want to take. A should own PQR, B should own XYZ. Cash of 10 crore should be distributed to Mr. A and Mr. B, and all the cross holdings should be cancelled. Is this the mandate given to me? Yes. I am told there is a dispute. I am told this is a family. Family does not necessarily mean brothers, cousins will also be family. Right? Supreme Court way back in Kale's case has said that a genuine family arrangement to resolve either present or even likely disputes is not a transfer under 247. Settled position, no stamp duty also. Therefore, and this hint is given to you in the problem itself, case study. They are saying family settlement agreement, right? So have a family settlement agreement, whereunder you say that there is now a dispute or a misunderstanding which is arising between Mr. A and Mr. B, and that we anticipate that going forward our children will further fight. The fights will aggravate. Therefore, to maintain peace and harmony of the family, we want that A should take care of PQR, B should take care of XYZ, all the cross holdings should be cancelled. Therefore what? Therefore all the 3 companies with the consent of Mr. A and Mr. B should file a scheme of capital reduction whereby all their cross holdings are cancelled without consideration. So capital reduction without consideration cancelling all your cross holdings. Therefore, each of the company will have a capital loss available to it. Okay. Then after that is achieved, Mr. A will transfer shares of PQR to, transfer shares of AB to Mr. B or XYZ, whatever, and the other brother will transfer the 50% shares to the first brother. Thereby, one way is to exchange of shares. The second way is that if I am looking at it from the family arrangement perspective, it is not a transfer if there are genuine and bona fide disputes. I am not saying create disputes for this purpose. If there are genuine and bona fide disputes, then there will be no taxation whatsoever, and you will achieve number one, cancellation of cross holdings, swap of shares of Mr. A and Mr. B. You will be left with only one problem of distributing the 10 crore of rupees. Take that company into voluntary liquidation, distribute the 10 crore rupees to the only two shareholders, who is Mr. A and Mr. B. To the extent of accumulated profit, it will get captured as dividend. The balance will be capital gains. Am I clear on the case study solution? Right? So your implementation plan can be something like this. Execute a family settlement agreement, unwind PQR XYZ cross holdings, intra-family share transfers, distribute 10 crore cash, wind up AB Private Limited, step 5 should come above, consolidate and clean up. You could have another option that your AB can declare dividend, which is not an optimal route, because dividend will attract normal rate of tax, liquidation will attract capital gains at least on part of the portion. Right? Compliance checklist, you can do it on your own, and I mean the objective is income tax and not. Right? Good. Sorry? Anji. Demerger. Okay. किसमें डीमर्जर के लिए अंडरटेकिंग चाहिए ना आपको? किसको डीमर्ज करोगे? वो तो दो इंडिपेंडेंट बिजनेसेस है ना, दो इंडिपेंडेंट कंपनी के, तो एक ही कंपनी के अंदर अंडरटेकिंग चाहिए ना डीमर्ज करके बाहर फेंकने के लिए, तो क्या फायदा होगा? नहीं, तो भी उसको शेयर होल्डिंग तो देना ही पड़ेगा ना कंबाइंड मर्ज एंटिटी में, मर्ज एंटिटी में देना पड़ेगा कि डीमर्जर में दोनों को देना पड़ेगा, तो आपका ऑब्जेक्टिव तो डिफीट हो गया सेपरेट करने का. You write it on paper. If you go by family settlement, it is not a transfer, so value becomes immaterial. Because by and carry says there is no transfer. If there is no transfer, there is no capital gain. कितना भी value होने से. Come next 2 or 3 years, some author is writing an excellent book on family settlement. I am working with him. So, I mean, then things will be clear. Family settlement is a very, very major area of practice. I began by saying I am assuming this is a genuine family dispute. People have created family disputes, but then it should go through the muster of allegation, cross allegation, courts, etc. Otherwise, you will fail. Can I go to the last case study? हाँ? आपको खुद को मन में मालूम हो गया गिनने के लिए पेपर पे ही चाहिए. family arrangement presupposes an existing right. सुप्रीम कोर्ट इज सेइंग कि ए का राइट बी में है, बी का राइट ए में है, सब इंटरमिंगल हुआ है. टिपिकल जॉइंट फैमिली में कैसे होता था, मारवाड़ी जॉइंट फैमिली में या नॉर्थ इंडिया में, कहीं ना कहीं तो एक है वो एक भाभी घर का काम करती है तो एक ऑफिस आती है तो कोई कुछ कर रहा है, कोई कुछ कर रहा है. असेंडेंट की बात मैंने नहीं की, मैंने बोला खाली फैमिली की. कितना, as long as I mean, how many generations will go? 3, 4. Beyond that, will not go. But ultimately, that relationship has to be there. Nothing will apply. I think the next paper. Nature. नाम ही उसका फैमिली है. चलो अभी that is more important. Can your discussion wait? Thank you. Okay, I have 15 minutes to wind up this. Now, honestly, the organizers had given me the case studies on Monday at 7 o'clock in the evening. I had chosen not to see any case study because by that time I had done my work. But I have seen the other two. This case study I had not seen. So this case study was based on that one bullet which was given to me in your flyer. That multi-use or whatever it said, 4 distinct uses. So you will have to modify and understand this from the perspective of your fact pattern. I'm going to discuss only the principles of this case study. Okay? Because I have not gone by your diagnostic center and this and that, because I had presumed certain sets, because I could never anticipate that somebody will give me case studies of 46 pages 2 days before the presentation. Now, I'm presuming that I'm the owner of one building which are being put to 4 uses. A part is used for my business, whatever my business is. One part is run as a banquet. One part is let out on a revenue share basis, which in your fact pattern they are saying what lab or whatever they have said. And there is one part which is a bare renting case, right? Now, the questions which you need to understand to answer the case study are whether rental income in respect of a portion which is let out on a bare letting basis can be taxed under the head income from business. Is there any way by which I can say that though I have let out the premises on rent, simpliciter, I am not giving any services, nevertheless the income in my case is taxable not as house property but as business income? First proposition. Before that also you need to examine whether can one part of the property come under one head, another part go under another. I must have some indication in the law to suggest कि एक प्रॉपर्टी का एक हिस्सा एक हेड में आएगा और उसी प्रॉपर्टी का दूसरा हिस्सा दूसरे हेड में जाएगा. कहीं तो मुझे इंडिकेशन चाहिए लॉ में इस बात. Does letting out on a revenue sharing basis necessarily mean that rental income is business income? Or revenue sharing also can be house property? Okay. आई एम सेइंग प्योर सिंपल, मैं तो एक डॉक्टर को क्लिनिक चलाने के लिए मेरा दुकान है जो मैं दे देता हूँ और उसको बोलता हूँ कि भैया इसकी रेंट 50,000 और 25% of your revenue, whichever is greater, because my premises are in an area which is unhygienic, and therefore you will have greater patients over here, and therefore your revenue will be higher. I want a share in your revenue. Okay. Then, are the provisions of Section 38? The entire case study is on the interpretation of 38, applicable post introduction of concept of block of assets. If you remember, Section 32 requires two conditions to be satisfied. Number one, ownership test, and number two, user test. Now, post block of assets, all assets of a similar category get merged into one block. जब सेल होता है तो ब्लॉक का कॉमन WDV नीचे जाता है by the selling price. Therefore, I do not know. There may be an asset in the block, but उसका वैल्यू ना भी हो. पॉसिबल के एसेट का वैल्यू है ब्लॉक में लेकिन एसेट नहीं है, वो भी पॉसिबल कि एसेट की वैल्यू तो अंदर रह गई है लेकिन एसेट नहीं है. वाइसा वर्सा एसेट है लेकिन उसकी वैल्यू नहीं है. Therefore, my question is, post introduction of block of asset, is the user test relevant or is the user test academic? Okay, has the legislature missed out on? Does it make a difference if the building is first introduced in the block? I think this somebody asked me on the dinner table or lunch table. Does it make a difference if the building was first introduced in the block and was entirely self-used and or running as a banquet and subsequently let out against the position that right from year one the building was put to 4 uses? I think you asked me this also today morning. Then what will be the consequence if the entire building being in the block and proportionate depreciation being disallowed as against the block having only that part on which depreciation is always allowed? Let's understand the law. Look at Section 22. The annual value of property consisting of any buildings or land appertaining thereto of which assessee is the owner, I have got no difficulty, other than such portion of such property as he may occupy for the purpose of business. Therefore, law is envisaging that एक बिल्डिंग का एक पार्ट आप अपने यूज के लिए कर सकते हो, उस पार्ट को हाउस प्रॉपर्टी से निकालो. So right from day one, if there is a part of a building which I am using for my own purpose, that will never enter the charge under Section 22. It will get out because of that exclusion. There is Section 28 explanation 3 introduced from 1425. It says it is hereby clarified that any income from letting out of a residential house or part of the house, letting out of a residential house or part of the house by the owner shall not be chargeable under the head profits and gains of business and shall be chargeable under the head income from house property. So they are saying come 1425 assessment year 25-26 and thereafter मेरे को renting of residential house business में नहीं चाहिए. Therefore, if at all Chennai Properties earlier permitted me to offer rental income under the head business, now if that is qua a residential house, law will, Supreme Court will have to give way to the provision of explanation 3. You have block of assets, definition, group of assets falling within the class of assets in respect of which same percentage of depreciation is prescribed. 32 requires 2 tests. Building is owned, number 1 में. Building is used for the purpose of business, number 2. Rate of depreciation is given to me in the table A or whatever that is. Okay, now you have 38.2, which says where any building is not exclusively used for the purpose of business. Therefore, it is partly used for the purpose of business. Mind you, 38 applies where building is not exclusively used for the purpose of business, means it is partly used for the purpose of business. Where it is totally not used, 38 will not apply. Okay, 38 allocation will come where part is business use and part is non-business use. Entire use is non-business, 38 will not come. Okay, the deductions under whatever depreciation etc. shall be restricted to a fair proportionate part which AO may determine having regard to user of the building for the purpose of business. Therefore, law is envisaging a particular asset used partly for business, partly for non-business purpose. It is saying AO will allocate and give you deduction for depreciation only qua that part which you have used for the purpose of your business. Okay. Now, this is a circular in the service tax regime saying that in a revenue sharing agreement, two contracting parties act on a principal to principal basis and one does not provide service to another. The activities are not covered under service tax. Therefore, suggesting that revenue sharing agreement is my own business activity. It is not that I am providing a service to my counterpart from whom I am receiving a particular revenue, not relevant for income tax, but I must keep at the back of my mind that the very same government which has drafted the income tax law has taken this position in the context of service tax. Now, the expression used for the purpose of business takes within its ambit not only actual user of the asset but also readiness of the asset to be put to use. This, of course, if the asset is likely to be used. Now consider somebody who has constructed a mall and is given on rent shops in the mall, right? या फूड कोर्ट में वो अपने वो जो भी शॉप बोलो आउटलेट बोलो जो भी वो देता है. Now the rental income from letting out of a mall undoubtedly will be business income, right? Now if some of the shops are vacant because किसी का एग्रीमेंट खत्म हो गया और नए का एग्रीमेंट शुरू नहीं हुआ और नया कस्टमर ढूंढने में मेरे को 2 बरस निकल गए, आर वी सेइंग कि 38 will apply and I will not get depreciation because those shops are not put to use? The answer is no. 38 will not apply to those situations because those shops, though not put to use, are ready to be put to use and therefore qualify for depreciation. To understand it, compare it with the example of a fire extinguisher or firefighting system. I may have a firefighting system worth crores of rupees in my factory. Will I use it? The answer is I will use it only when there is fire in the factory. Till such time that system will be ready to use and will qualify for depreciation and I will be granted depreciation. The computer printer in the olden days, people were very conscious in printing उस जमाने में, right? Now, does not mean that अगर printer पे printing continuously नहीं किया तो मैं आपको depreciation नहीं दूंगा. मैंने अगर एक ही महीना प्रिंटर को यूज किया है, does not mean 11 महीने का depreciation डिसअलाउ हो जाएगा, right? Now, yeah, this small thing I took number of days. Now, in depreciation, block of asset में, there is a provision if the asset is used for less than 180 days, then 50% depreciation. Therefore, that user test for number of days applies only in year 1, does not apply in subsequent years. In subsequent years, what will be imply is the readiness to use. Somebody said, business बंद कर दिया तो क्या? अब business बंद कर दिया अगर तो उसके बाद आपका डेप्रिसिएशन स्टॉप हो जाएगा. यू कैनॉट से दैट द एसेट स्टिल कंटिन्यूज टू बी रेडी टू यूज एंड देयरफॉर आई विल कंटिन्यू टू गेट डेप्रिसिएशन. नाउ for the proposition or the criteria as to whether rental income is house property or business, you have plethora of decisions. The controversy continues. If I have to summarize it in one line without the propositions, since I am running out of time, the proposition will be that if I am carrying out complex commercial activities with an intention to earn profits, then it will be categorized as business income. Otherwise, bare letting or letting simpliciter will qualify as the income from house property. If I am offering income under the head income from house property, for that portion whose annual value is being considered under the head house property, there is no question of claiming any depreciation. There is no question of claiming any depreciation. Now, fixed and periodic receipts is not necessarily a decisive factor to come to a conclusion whether it is rental income under house property or business. That may be one of the factors, but that is not a conclusive or decisive factor. On the other hand, revenue sharing agreement always does not mean it is business income. There is a strong chance that if it is revenue sharing, my view may tend towards business income, but merely because it is revenue sharing does not mean that I conclude that it's an open and shut case for revenue sharing agreement. If you go through the case laws and study, you will get at least half a dozen case laws where revenue sharing has been held to business income, but the fact pattern was that the assessee was carrying on that business himself first. He found it unviable. Then he entered into a collaboration. मैं होटल चला रहा था, होटल चल नहीं रहा था, तो मैं फोर सीजन्स वाले को बुलाया, बोला भैया तू चला, मेरे को 30% of the revenue दे देना. It is in those cases that the tribunals and the courts have held that revenue share is, again, if it is only revenue share, greater chance of business income. But if it is minimum this much rent or revenue share, whichever is greater, then you are not taking a business risk. Then you are, capitalizing on your property value. It's an investment decision. It's not really a business activity. Now, what are some of the criteria? I've tried to jot down. What is your primary objective? What's your primary objective of renting? To exploit the property commercially or to give the property on rent and earn passive income sort of a thing. What is your corporate object if you are a company? What is your memorandum saying? What is your Chennai properties? Supreme Court was influenced by what is the memorandum of association saying? Commercial exploitation of the property to further the professed or the stated object of the company, which makes letting out a part of business. Entire or substantial income is from letting out, which is the primary activity. If receipts are part of revenue sharing agreement rather than conventional rent, as I said, it tends towards business. Intention of the parties, providing a range of common services. Now, before I forget, let me tell you that questions arose in the group discussion as to composite rent hai ke separate rent hai. Some people said, sir, agreement एक है कि नहीं, sir, वो amount दोनों का दूसरा दिया है कि नहीं. All that is irrelevant. Go to the Constitution Bench decision of the Supreme Court in Sultan Brothers. 5 judges of the Supreme Court have given 3 tests. They have said answer 3 questions. If the answer to 2 is in the affirmative, 1 negative, then it is composite letting, otherwise it is not composite letting. They say we are not interested कि agreement एक है कि 2 है. Even though separate agreement, though separate amount may become composite if I have to summarize in one sentence, the intention should be that one cannot be let out without the other. If both have to go hand in hand as a married couple would, then it is inseparable, otherwise it is separable. मैं आपको ये हॉल देता हूँ, बोलता हूँ सर्विस चाहिए तो इतना, नहीं चाहिए तो इतना, फर्नीचर नहीं चाहिए मैं निकाल दूंगा. Then this is inseparable. It is not a case of composite letting. That question arose in the context of section 56. If you go to section 56, it contemplates under the head income from other sources, taxation of amount of letting of building along with plant, machinery and furniture. If it is not taxed as business. If it is not taxed as business. Therefore, please be very clear, composite rent can never become house property. Rent of building can become business on other sources, but rent of something else can never travel to the head house property. Right? I mean, house property could be compared with the ladies' compartment of a railway train, where a gents is debarred from entering, whereas that lady can jolly well go to other head of income. Okay. Now, Shambhu Investments, another Supreme Court decision which department keeps citing for taxing income as house property. Now, what were the facts of Shambhu Investment? Shambhu Investment में एक छोटा सा यूनिट था प्रॉपर्टी का, बॉम्बे की एक बिल्डिंग है नरीमन पॉइंट में. उसमें उसने टेबल स्पेस बनाया. What was the furniture? The furniture was fan, tubelight. The Supreme Court said, what joke is this? Again, the cost of the property was more than recovered by the advances received. So again, as I said, गोदूली का फैक्ट पैटर्न देख के डिसाइड करेंगे. वैसे सुप्रीम कोर्ट का फैक्ट पैटर्न क्या था? टेबल स्पेस रेंटिंग. What was the furniture? Skeletal furniture. You're talking of fan. You're talking of an tubelight and so on. Not talking of any sophisticated things. Again, you're talking of somebody who has recovered the entire cost by way of advance rent. Supreme Court said this is not business, this is house property. Right? Department relies on Shambhu Investment where it wants to tax rental income under the head house property. You will rely on Chennai properties where you want rental income to be taxed as business income. Okay. Now, Shambhu Investment, when it came, was a terror. Now, several decisions have distinguished Shambhu Investments on the ground that Shambhu Investment is a brief order of the Supreme Court confirming what Calcutta High Court said. Now, what Calcutta High Court said cannot be contrary to Sultan Brothers or cannot be contrary to Chennai properties, which are per se Supreme Court decisions. Supreme Court in Shambhu does not decide anything else. It just says, I concur with the order. I am aware that even that statement means merger, but it is a different level of weightage which one will have to attribute and which is supported not by, by the judicial precedents. Kerala High Court in Oberon Edifices distinguishes Shambhu Investments. Similarly, it also distinguishes Artikal Shopping Complex and Radadarkar as well. The Bombay Tribunal in Piramal Estates again distinguishes Shambhu. In fact, the assessee very boldly goes and says that look here, Shambhu supports me for the proposition that tax me under the head business. He goes head on to the tribunal and says that the Shambhu, a decision which is against me, supports me, and the tribunal agrees with the assessee. Revenue sharing, whether always business income, I have dealt with that. Then what is it? Can depreciation be claimed on the whole income even though part of it is let out and the income charged under the head house property? To my mind, answer will be categorically no. If the building rental is taxed under the head house property, you cannot go and say, I want deduction under 24 into bracket A of 30% as also I want a deduction of depreciation. Right? Now coming to the main question, is 38 overridden because of the concept of block of assets. No, says the Chandigarh bench of tribunal in Singla Associates, as also special bench of tribunal in Gulati Sari Center, that the concept of block of asset, the provisions of 43(6)(c) and 50 are not contrary to the provisions of 38(2). Therefore, 38(2) will stand on its own legs even post introduction of the concept of block of assets. Now, Delhi High Court in LP Hospitality was an interesting case where SSC transferred 85% of its daily collections to somebody with whom he had a revenue sharing agreement. Understand what was happening? SSC को revenue share आ नहीं रहा था, SSC revenue share दे रहा था और खुद की बिल्डिंग से बिजनेस कर रहा था. The tribunal, Delhi High Court said that the entire building is not used for business because 85% of the revenue is going to somebody else, and therefore they confirmed the finding of the tribunal that only 18% of the qualifying depreciation will be allowed. Right? Fine. I think I have exceeded my time, so let me stop with answering the case studies. If somebody can share the. मेरे पास नहीं. Now your fact pattern is now ground floor, the company is carrying on a restaurant business, undoubtedly business income, running a restaurant managed by the company. Depreciation on the portion used as restaurant will be allowed. The first floor is a hotel. Company accepts bookings, provides housekeeping, offers room service. It's a proper business activity being carried on. Income will be business income. Depreciation of that first floor will be allowed. Co-working facility. Now your company provides furnished workstations, offers internet, charges users on daily or monthly basis. The most important criteria for taking it as business income is it charges users on daily or monthly basis, which means the user is not bound to continue beyond 24 hours. You walk into my co-working facility, you pay me per day and you walk out. You want a discount, you enter into an arrangement maybe for a month or so. But if the arrangement is a long-term arrangement, but charges are on a per day basis, does not mean that it becomes business. So your agreement itself has to contemplate कि the contract आज का है, जैसे आपका courier वाले के साथ contract होता है. आज आया, contract किया, उसने बोला 100 रुपया लूंगा, ये लेके जाऊंगा, लेके जा 100 रुपया और खत्म कर. Right? So that contract is on a transaction to transaction basis. Possible I can have a minimum arrangement with a courier कि minimum आप मेरे को 10 रुपये चार्ज करो instead of 15 रुपया, मैं आपको कम से कम 100 बार बुलाऊंगा महीने में. So that does not mean that it is not a terminable. Therefore, the most important point in your second floor is that argument that the charges are on daily or monthly basis, assuming that the contract is terminable on a daily basis or contract is on a day-to-day or a month-to-month basis. Nobody is bound to continue the contract for a longer period of time. Now, bank branch. If it was a jewelry shop, I could have possibly argued that the rent from bank is business income. If it is a bank letting within the college campus or within the university campus, there are decisions to say it is business income. Rent from a post office within the factory in the olden days, जब ये आपका कुछ भी नहीं था, post office was the only medium of communication. There are decisions to say this is going to be business income because that activity is incidental or subservient to my business. Without that activity of letting out to a bank. In Bombay, we have a jeweler called Vidwandas Bhimji Javeri. who has a shop in Zaveri Bazaar. He does not collect cash at all. There is a one table space and counter let out to some bank, nationalized bank. उस बैंक का कैशियर बैठा है वहां पे, वो इनवॉइस बनाता है, जाके पैसा आप उस बैंक पे जमा करो और फिर वो आपको ज्वेलरी देगा. Therefore, the risk of the cash is not of the jeweler. Something happens, the risk is of the bank. In his case, letting is subservient to the business. But in the fact pattern of the case study, I don't see how letting out of a bank is incidental or subservient to the business. Railway booking counter within the factory in the remote village was held to be business income. Okay, fine. Then what? Diagnostic center. Now, diagnostic center, यही है ना revenue share पे? ये revenue share पे. Now, to my mind, merely because it is revenue share does not mean it is business in this case. Because this company is in the business of running a hotel, running a banquet hall, letting out to a bank. Therefore, I would say you may try your luck, you may get it as business, you may not get it as business. If it is pure simple revenue share with some services being provided by you, no minimum guarantee, then greater chance of it going through the muster of business income and getting depreciation. Residential use of a managing director, undoubtedly it is for the purpose of business. The managing director will pay tax on the perquisite value of that fifth floor in his. I will claim it as a deduction under the head business, and I will also get depreciation. For this proposition, you have a direct decision. I think I have exceeded my time by about 15 minutes. Apologies for that. Thank you. Thank you.
So, on behalf of each one of us and on behalf of the EIRC of ICAI, thank you so much, sir, for giving these 3 days and multiple number of days before the event as well, preparing everything for us and ensuring each and every aspect of all the 3 case studies that is covered. Thanks a lot. Thank you so much. Please give a huge round of applause. And then our next speaker is also here. So we'll be starting with him. Having a small take of it.